Hello Forex traders. So this SMC strategy will change your life if you really follow the rules that are stipulated with it. Okay, so remember, SMC, it involves change of character and break of market structure. Okay, so now when you understand that, you'll get clear setups, and it is for beginners, right? So now here, first of all, you have to first identify the market direction. Okay, now for example, here it is a bullish market. We shall use only two time frame, that is a 4-hour time frame and a 15-minute time frame for confirmation now. Okay, so now here, when you really identify your market direction that is bullish, remember you have to first look for the break of market structure. Now we are going to start from right here. This was a high. Okay, because now it is breaking higher highs and higher lows. You can see that this was a high, and when the market broke that high from right there, okay, so now you can see that it created a new high. Whenever the market breaks structure, it creates either a new high or a new low. Now here it created a new high, and when it creates a new high, it has to retrace. It has to retrace to our discount level. Okay, so now you will see that this is your discount level right here. Okay, now it has to retrace up to your discount level. Here it is your discount level where there is a support level, right? So now you have to wait up to when the market reaches that level, and those levels, there are some zones that you can also look at. I said you can look at the support level, and also you can look at an order block zone right here. Okay, then when you draw your order block zone, you go to your lower time frame and see what they considered when they are entering that market. Okay, you see how it behaved. When the market reached that zone, it has to make a market structure shift. Remember, we are bullish. Also, the lower time frame has to be bullish. Okay, so now you can confirm with this. So you can see that the market actually the market was ranging from here. You can see there was a range right here. Okay, because of these equal highs and these equal lows. So that means that it means that here we would first wait for the market to come and break that range. You can see that the market came and broke that range from right there. The market broke that range with full body candles. That means, traders, this was a very good confirmation for you to enter immediately after the break of that range. When you enter after the break of that range, of course, I said here you put the stop loss just below. The stop loss had to be just below these lows. Okay, and the TP, it is always a 1 to 2 or a 1 to 3 according to your risky tolerance. So you can see how the market moved after that. But remember, we got that zone on our higher time frame, guys. So that's where you have to get the zones you trade from. Okay, so let's go back to our higher time frame and we get another zone. Remember, the market is bullish. We are looking for bullish trades only. There was another break of market structure right here that we saw. Okay, here there is another break of market structure right here. I said whenever the market breaks structure, it has to retrace. Remember, it creates a new high. This is the new high that the market created. So now it has to retrace to our discount level or to our zones. Now here it retraced to your order block zone right here. Okay, it retraced up to your order block zone. Then here let's go to our lower time frame and we see the change of character that the market actually used before moving to our direction, right? So let's go there. So when you reach here, you'll see that when the market reached here, it created a change of character. The change of character that we are talking about is this. This was a low. Okay, it actually this was a liquidity sweep to the downside or a low to the downside. Then you can see also it created liquidity. It swept liquidity up and down. This is a change of character that we are talking about. So now when the market creates a change of character, of course, it always has to retrace to our zone. It has to retrace to before it makes another move. So your role is to wait for the market to retrace. Now here it actually made a liquidity sweep. So here, when you enter from a zone, for example, from this order block zone, for you to avoid liquidity sweep, you have to give your stop loss some space, so that when the market starts moving, you are not swept out early. Okay, so now you can see when the market made change of character, it started moving up, and it is actually moving very well, guys. But after creating that change of character and getting our order block zone from our H4 time frame, you can put the TP to any zone you want according to your risk tolerance. So when you really apply this SMC strategy to your trading, you will get clear and good setups with higher risk to reward ratio. So if this video has been helpful to you guys, consider subscribing and give a like to this video. Thank you for watching.